Okay, thanks very much, Chrissy. It's good to be back at the conference. I missed out last year. I was playing golf in my favourite course in Stirling at a family wedding. So it was 2 years ago when I last talked to the conference, described our 4 gas discoveries in the not-to-be-forgotten Cooper Basin. I think I'm the first presenter in the Cooper today. 50 years in the making and still producing a lot of gas. So we've got an emerging new gas production hub. I said it was going to be emerging 2 years ago, and I'm proud to say that we have 1 field online as of February, and later this month we'll have a second field called Odin online as well. So please do your own research, read the disclaimer, and we've got some reserves and resource notes as well on there. So on the highlights side, just thought I'd give a quick overview. Metgasco are a highly undervalued small cap ASX listed company who own 25% of Valley in the Cooper Basin and the Odin field. So Valley started production in February, and Odin's coming along, as I said, later this month. There are a few companies which graduate from exploration success to producer status in less than 4 years. So it's really the presentation. I'll explain our strategy and the gas market dynamics that allowed Metgasco and its partners to commercialize these 2 gas fields. I think it's a good story that you'll enjoy. I'll finish the presentation with a summary of the exciting catalysts. Some of them are very near term, which should excite some new investors and current investors, and also look forward to what's happening next in the field. So I thought I would explain the sort of business transformation. Some of you will remember way back pre-2016, we were a coal seam gas player in the Northern Rivers assets in New South Wales. I took over about 5 years ago, and it was just about the time where the company had gazetted 2 Cooper Basin blocks, and also, I managed to get into an asset in the Perth Basin, and we also were in the Gulf of Mexico with Byron Energy. The power of a good exploration portfolio is not everything's going to work. I'm very proud that we have had a 4 from 4 drilling, 3 in Valley and 1 in Odin. The wells at the Perth Basin, the Gulf of Mexico, which were chasing oil, didn't work. So over the next few slides, I'll explain the key catalysts in the journey to our first gas. Yeah, so the company snapshot. Current share price is around about 1.2 cents, and the market cap is around about 13 million. Pretty low compared to the fact that our net Valley and Odin gas reserves of 35 petajoules. So if you're about $1 a petajoule, we're probably a third of what we should be valued at the moment. In March, we secured a $5 million debt facility, and we got supported by 2 of our largest shareholders, which is an excellent sign for any company that your shareholders believe in what you're doing. The map on the right there shows the ATP 2021 license, and it contains the Valley field, the large field in the red, and you can see the 3 wells that have been drilled. Odin overlaps the boundary to South Australia and Queensland, and about 50% of Odin is in each license. So what is the overall strategy here before we get into the specifics of how we managed to unlock the catalyst to production in 4 years? It's very much a hub and spoke strategy. I talked 2 years ago about having a string of pearls. There's lots of exploration upside. So we've drilled 4 good gas wells. We're going to bring them the 4th one into production soon, and ultimately we want to drill and tie in numerous gas prospects. You can see oil prospects in the dark blue on the map, and they're all very close to our production infrastructure. So the idea here is basically fill up. We've built a pipeline. We've got a path to market. It's a 20 terajoule a day facility. The gas price is good, and I'll talk about that in a minute. It's a very high margin gas project that will allow us to generate significant revenue. So we want to get that revenue, grow the business, and expand our footprint in the basin. So really, the story of farm out to production in less than 4 years, you can see the geological aspects down in the bottom right of the wells. We're in the Permian from the gas side, and there's potentially some oil in the Jurassic, which we'll be chasing in the future. But over the number of years, we have really pushed hard to develop and drill our wells and spent the last 3 or 4 years, a lot of it during the COVID period, and moving forward in the project. About two weeks ago, I presented to the SPE. Thanks to Steve. I think he's in the audience for giving me the chance to present to the society. That being a petroleum engineer myself was great to do. There was a really good presentation on why we gazetted all the technical aspects of why we got into the permits that we did. 600 BCF within 20 kilometres of the boundary was one of the reasons, and there's also 11 million barrel oil field at Dalangari, so we're hoping for some oil in the future. So the way Metgasco did this and commercialised the project, we owned 100% on the Gazettal. We farmed down to Vintage, who are the operator, 50%, and Mike Dodd will be here tomorrow to talk about the same project and the others that they have, and we also farmed down 25% to Bridgeport. And that meant we got a free carry on our first well, the Valley 1 well. We tested a post-stimulation rate at 4.3 million standard cubic feet a day, which is excellent for a low permeability reservoir. We followed up with 2 Valley appraisal wells in 2021, and that allowed us to go to the independent expert to get 101 petajoules of gross gas booked for Valley. So moving on to Odin, you could see that, and I mentioned earlier that the reservoir straddles the two licenses. We didn't want to drill in the Odin side and give them a free kick to the operator on PRL 211. So what we did is we did a farm-in deal, and we got some interest. That was the 3 joint venture partners. We struck that 2-3 years ago. We drilled the Odin 1 discovery when we drilled the Valley appraisal wells, and that turned out to be the best of all of the wells. Had a great net pay, tested gas, and really much better permeability and porosity that Valley had. Flowed naturally without stimulation, 6.5 million standard cubic feet a day, 1,800 psi flowing wellhead pressure, which those of you who follow these things, that's a pretty great rate. So Odin 1 is only 1.4 kilometres. You can see that we ran the pipeline from Valley into the Beckler field where we tie it into the Santos Mumba system. We ran that past the Odin 1 well, and it's only 1.4 kilometres away. So the gas market, it's a great time to be a seller in the market. It's amazing. The ACCC report, which I quote on this slide, basically said there's a 30 petajoule shortfall in 2023, and you can see the supply-demand gap over the next number of years just growing. So basically, because of the offshore fields, the Gippsland fields and the Otway fields declining very rapidly. So it's a great outlook for the gas price. And as Tor said, the small cap companies we are exempt from this $12 a gigajoule price cap. We'll be producing less than 100 petajoules a year, and we're providing all our gas to the domestic market. So Metgasco's goal is, and the very lowest bullet point says this, is to deliver as much gas to fill our 20 terajoule a day pipeline and facilities at Valley, and continue to do it through the period where the supply-demand gap is there. And we're getting in before the Beetaloo producers, he says with a smile. So on the overall resources and reserves, we've got 2 really good gas customers. In mid-May, the PRL 211 JV signed a GSA with with ENGIE, and it's ENGIE Mitsui joint venture that run the Pelican Point power plant in South Australia, so it was good to get a South Australian customer. So we signed up for all of our Odin gas to the end of December 2024. We got ACCC approval to market beyond that, and we're at a very advanced stage of marketing for the next tranche of Odin. And so we're underway doing that. Odin has 39.7 petajoules of 2C resources, which probably in a month or so's time will convert into reserves. And the majority of that is uncontracted, and as I say, we're working on that now. So Valley 1, going back to Valley, you can see in the bottom donut chart, has 85 petajoules of uncontracted gas, and we've got 16 petajoules that's contracted to AGL. And as Tor said, the commercial team at Vintage, with our support, did a great deal of helping develop and pay for some of the costs of the development of Valley. We got a $50 million prepayment, where it's a win-win, where AGL got a reduced gas price. So I think that was a great deal, and well done to the commercial team to get that pricing. As I say, it's tiered pricing, so we still get paid for the gas that we produce. So just focusing in on Valley, what we're doing right now. So Valley 1 has been producing extremely well, and it's producing to model rates. It's just under 4 million standard cubic feet a day of raw gas selling to AGL over the last quarter that we quoted in our quarterly report. Valley 2 and 3 have taken a little bit longer to come on. There's more fluid in these wells, and bringing these 2 wells on has been delayed. We're pending fluid removal in the well bores. We've run a production log, and we're just reviewing what we need to do from a root cause analysis there, and work is ongoing to bring Valley 3 online. On the Odin side, we've basically took the decision, due to the proximity, to do a fast-track tie-in in November last year, and that is almost complete, and we're getting close to the commissioning, and as I say, that should be later this month. A 1.4 kilometre pipeline was installed when the Valley pipeline was put in back in January. It's basically a rental equipment for the short-term production, so we're basically paying a little bit more operating costs, and the long-term pipeline will go back to Valley to use the production facilities there. And it's the first example of our Metgasco hub and spoke strategy. Getting close to the end, so we've got a number of approaching catalysts. The first gas from Odin, as I said, in September. The restarting of production from Valley 2 and 3, securing a second GSA. We're very advanced on that. And then basically looking to the next year and drilling at least one Odin well, and the joint venture is reviewing that and just looking to see potentially what rigs are available. Again, we want to fill that production hub up to its maximum capacity. A final slide from me, and basically on conclusions, it's the same one you saw at the start. Metgasco is a revenue-generating producer, which will use that revenue to fund growth. We've made that transition from explorer to producer. We've done it very fast. We have a flexible onshore gas strategy and are reviewing other business development opportunities to expand our footprint in the Australian onshore basins. Lots of near-term catalysts. And as I said earlier, we're at bargain basement price, so it's a pretty compelling opportunity if you want to get into high-margin Cooper Basin gas production. Many thanks for the chance to tell the story today, and I'm around the conference for the rest of today and tomorrow. Thanks very much.